Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday the 31st of October. Markets are still responding to this Fed meeting last night. There was it started off being a relatively hawkish. The Fed statement and the rate cut was pretty much exactly what the market had expected. And then Powell started to bring out an air of slightly hawkish positioning in the speech, in the press conference, but then turned around and started saying that inflation was a big issue, and the fact that the Fed wouldn't be hiking rates until a really substantial increase in inflation. So that really did hit the dollar. You can see the move lower, sharp move to the downside on the dollar index since that assessment from Jerome Powell, and what we have seen is Treasury yields falling off, both the 10-year and the 2-year coming lower, and that has really hit the dollar. And that's affected across markets. You've seen Euro-dollar rebounding decisively back above 111 big figure. You've seen sterling dollar back higher. You've seen the gold price back above $1,500. Gold was $1,480 until Powell said that part about inflation yesterday. And interesting that we saw this significant improvement coming through also on the S&P 500 as well, closing again at all-time highs, having initially sort of slipped to the downside, the market rebounding into the close, volatility coming lower again. So all sort of suggesting that this decline or the assessment that the Fed won't be hiking rates for a long while, because the assessment being that inflation is very subdued and still no real sign of pick-up. So subsequently, the dollar is falling away quite strongly now. So very significant impact through markets from that Fed meeting. With regards to what we're looking at today, we've got, another important series of data points, inflation being the main focus this morning, but we've had also this Chinese PMI data, the official PMIs for China. Look at that composite PMI falling to 52. Now 52 on the composite PMI, that sort of hints at the fact that the Chinese government are likely to have to respond to that with some sort of additional stimulus. So subsequently we've seen risk appetite actually holding on fairly well in response to those Chinese PMIs. This morning we're looking out towards the Eurozone inflation data, flash inflation for October, expected to see the headline dropping back to 0.7%, core remaining at 1%. But at the same time, we're also expected to see growth numbers, prelim growth for Q3, expected to be 0.1%, so not great there on the growth numbers either. Unemployment to stay at 7.4%. Now, looking out into the afternoon, European afternoon that is, US consumption, US core PCE, personal consumption expenditure, at 12:30. That is the Fed's preferred inflation gauge. So instantly the focus turns to inflation for the States. So that is going to obviously get some attention this afternoon. Expected to drop back on the core to 1.7%. So again, not going to help the dollar this afternoon. So we've got all these data points to look out for. Now, my chart today, Australian dollar versus US. Now, what we have seen, I spoke about Aussie yen yesterday. Against the dollar, the Aussie broke out above this 68.95 level to a 3-month high yesterday, completing a breakout. And continued early today, although that has slipped back towards that breakout point. But I think that breakout between 68.80 and 68.95 gives a nice little band of support there, to a little near-term buy zone. You can see the momentum of this move. 65 on RSI is moving out towards, I think, 12-month highs for that, dating back to November 2018. MACD lines positive, stochastics positive. So it all sort of points towards buying the Aussie into weakness now. We've had that drop back on the Aussie this morning, but I think it's a drop into a band of support that's likely to provide a buying opportunity for the Aussie. You've got 68.75 to 68.80 on the hourly chart here. But anything that helps to unwind and renew upside potential on the Aussie, I think is a chance to buy now. So really could be seen as a good opportunity, this little corrective dip, because this move back through that 68.95 level of breakout is a key move. Now, testing obviously that initial downtrend, and I can move out that downtrend to show you how long we've been in it. It's about a 12-month downtrend. So obviously that's a key test there for the Aussie, and if it can break out through that, it's subsequently looking at 70.80, and you can also take this as a medium-term base pattern if you get the confirmation through, which hasn't yet been seen, but certainly a two-day close above 68.95 would help to reflect a confirmation of that base. But certainly building recovery on the Aussie dollar there. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos. Also go to our website where you can sign up for our webinars. We've got a payrolls webinar tomorrow.